Thanks for joining our Take 5 for Finance, where you can take 5 minutes, learn something cool about small business finance that's going to help you in your company. Welcome to 5 for Finance. I'm David Worrell, your CFO, and today we're talking with my friend Scott Baker, who is a fractional HR executive for small and medium-sized businesses. And we are going to talk about the new changes to the 1099 laws. That's the federal level regulations around hiring contract workers and how you have to report and withhold income taxes and what defines a 1099 contractor. So these things have always been a bugaboo for small businesses for as long as I can remember. I'm always being asked, should I hire this person or can they be a contractor? Which one's better? Which one makes more sense? But now I think it's becoming clearer and clearer what the official answer to that question is in most cases. But I'm going to let you hear it directly from Scott. So Scott, start by introducing yourself just a little bit and then cue up this idea of 1099 changes for us.
Good. Thank you, David. So I'm Scott Baker. You can reach me at Scott Baker at Stage 3 Leadership, and the 3 is the number 3. I've been in HR for about 25 years, mostly in-house HR, not as a consultant, in-house HR. So I know the dynamics that happen within companies. I know the dynamics that happen within an executive team, within a boardroom, all those different aspects, right? Very business oriented. About 3 years ago, I ventured off on my own to be fractional VP of HR, CHRO, and HR director, fractional HR director. So my niche is companies between 10 and 500 employees, although I have companies that have a lot more of those. And I come in either on an interim basis or a fractional basis and help just bring new ideas, bring it more strategy to HR, to companies. Whether you have an existing HR team or you have a PEO, I'm there. So one of the interesting things that happened about a month ago was the Department of Labor announced some new regulations in terms of what they consider to be a 1099 contract employee and what they consider to be a W-2. And this has been happening a lot, this tension between what is a W-2 where the company owns the employee, has to pay taxes, has to pay, especially in states that have different paid leave programs like California, Colorado, Massachusetts, New York. What do you do with registering an employee with an estate? All that different stuff, paying overtime. They came down and they added some more clarification to what's considered to be a 1099 and W-2. Now let's just take a step back for a minute to see what might be motivating this. So think about a warehouse. You have employees that are W-2 employees, and they're working side by side to 1099 employees. And they're both doing the same jobs, same classifications, everything. One's a contractor, one's a W-2. One gets company paid benefits, company paid holidays. They get paid overtime when they work, right? They get paid a minimum wage. Other side, you have a 1099 contractor. Work as many hours as you want. You're paid $5 an hour because that's what you are, a contractor. They don't fall under overtime laws because they're not an employee. And so some companies took advantage of this, obviously, and the Department of Labor took note. And so they said they're going to put together a whole bunch of 5 different things that they came up with that would identify the difference between an employee, W-2 employee, and a contractor. And so some of it is, are you working for a company full time? Right? So is this your only job or do you have multiple jobs? So for example, me as fractional HR, I have 5 different clients. I have my own equipment. I have my own hours. I pay my own taxes. I do different jobs, different places, right? I'm not full time in one company 5-7 days a week. So that clearly defines me as a 1099 or not an employee. But other people can be there can be a little bit of an overlap. So for example, and it's not clearly how this is defined, is somebody's doing fractional finance, but they're in a company full time and they're working 5 days a week and that's their only client. And they're working next to other people that are full-time executives. Some might argue that person should be a full-time W-2 employee. Now, is that going to really get the attention of the Department of Labor? Probably not. They're probably more interested in the overtime laws and that sort of thing. But you can imagine that at this point, there could be a little cottage industry going on with class actions for employers that may be misclassifying contractors that should be W-2s, and there's all this overtime regs. So remember, big money in overtime lawsuits because you can go back 3 years and get triple damages, even for employees that are no longer with your company. So if you are a plaintiff's attorney, you go after the money, you follow the money, and that's where you're going to go. So
that's what scares me the most is it's not necessarily the state or federal regulators saying, shame on you and you owe us a fine. But what scares me is the employees who are actually, or I should say the contractors who are actually employees, the contractors coming back and suing you directly. And I've had this happen where we paid a contractor, this is a client, paid a contractor for a year. And suddenly the contractor realized that he was responsible for the taxes. And he said, hey, wait a minute, I didn't know that. Actually, what he said was, hey, you should be responsible for the taxes because you paid me. And he took it to the Department of Labor or whoever who got on his side and opened up the Pandora's box. And once you open the Pandora's box, you find out that same employer, the company, had 12 of these contract laborers. And none of them were paying their own taxes because they had just totally misunderstood the law. And maybe somebody made some representation to them. There was no written contracts. Maybe for whatever reason, they were being treated like employees, or they thought they were employees. And when it came to April 15th, they found out that they were, $20,000 behind on their taxes. And it was a huge shock. And they figured they'd rather spend $2,000 on a lawyer to go fight the company rather than $20,000 to the IRS, and they won. They absolutely beat down this company in just a horrible way. It was just a real disaster. So yeah, the regulators can do it, the employees can do it. Overtime is one big one. But speaking as a CFO, put my finance hat on for a second. The cost of a real employee is often 25 to 35% more than their hourly wage, right? I'm paying you, keep it easy, I'm paying you $100 an hour, but with your benefits and your paid time off and your income tax matching and your FICA and FUTA and SUTA and all that stuff, you end up earning $130 an hour equivalent. And that $30 delta applies to anybody, whether they're a warehouse worker or an executive. And that's what motivates the employees to get mad. And it gives the government, that 30% delta gives the government lots of leverage to come back and say, you did something wrong by treating them as a contract labor. You've cheated them out of that 30%. Big motivation for some bad situations.
Yes. But remember, Family Medical Leave Act laws, forget time off, right? Or think about the state paid leave, like California, New York, Colorado, Massachusetts, and huge, right? So now a contractor sick and they don't get the benefit of that leave because the company hasn't been paying into it. Right. So there's a whole bunch. I'm not an attorney, so I want to make sure that I'm not giving you advice or whatever. But I would say to you that, states that have the paid employer, that have the higher state income taxes are going to be most interested in this.
Yeah.
To make sure that people are appropriately classified.
Yeah. Yep. Okay. So bottom line is hire everybody. Don't have contractors. That's one way to avoid the problem all the way around. It's just not to have contractors. But there are cases where you could have a contractor. Can you give us an idea? I've heard the ABC rule. Have you heard the ABC rule?
Yes. The ABC rule is valid in some states, but the government has actually, through the Department of Labor, has taken a bigger picture and added 5 categories or 5 considerations for what makes.
Just name them real quick.
I don't have them off the top of my head,
Okay.
But one of them is obviously, are you working for other employers? How much profit and loss responsibility do you have? I mean, certainly in our businesses we do, but think about a warehouse worker. They don't have that piece.
Right.
We have expenses and all that different stuff. So how much you provide your own direction versus the direction of the employer. And that's where you get into a warehouse worker. You do this, you fill those boxes, that's all you do. Right. So the more discretion that you have in your job, the better. The more you can show that you're truly independent, that you rely on other sources of income besides that is some of the ways that they look at it. So there is an ABC rule in many, many states.
Yeah, and one of the, I can't remember what the ABC stands for right now either, but one of the concepts was that you're not providing the core service for the employer. In other words, I'm an accounting firm. If I hire an accountant whose hours I am reselling and making money off of those hours, that accountant should be an employee. They are part of my core business, and the value that they're recreating is central to my identity and my business, and I'm reselling that value. Versus, say, an accountant who comes in and does my taxes, or a graphic design artist who makes the splash screens for my podcast. A graphic design artist is not central to my business. It makes sense that I would outsource and hire one for a few hours each month to do something ancillary. Is that still part of the 5? Does the federal government recognize that idea of core business versus ancillary services?
Yes, there is some of that going on in some states, and this is the complexity of HR, right? And also for finance, is because you have the Department of Labor, but you also have individual states. So what might be okay in one state may not be in another state. So the other thing I would mention that we didn't talk about is if you're hiring people through a third-party firm, a contract workers, that's different because you're paying the contracting firm, they're paying the employee, so the employer of that particular employee could be ABC Contracting Services.
Right.
And so there's a difference where they're then paying the taxes on behalf of that person because that's their employee, or they're providing, withholding certain information, or benefits or whatever.
Right. So on one of our last episodes where you were with me, we talked about the difference in hiring a person from Upwork and hiring them directly. So Upwork or Fiverr or the staffing agency down the street, those are intermediary employers of record who you're not, even though you're getting the benefit of contract laborers, you're paying a centralized middleman to provide contract labor to you, right?
Yes.
And that's okay. That's one way to just whitewash the whole thing.
That's fine. So you think about who you're writing the check out to. Are you writing it out to Joe Smith, or are you writing it out to ABC Staffing or ABC Graphic Design?
Right. All right. Way to go. I think that was a very interesting topic, and I hope that everybody who's listening will take the advice of get a middleman, put the people on payroll, or just be darn careful that you know the state laws and regulations by hiring a cool guy like Scott Baker, fractional HR Scott at Stage 3 or Scott Baker?
Scott Baker at Stage3Leadership.com.
Scott Baker at Stage3Leadership.com, and that's 1 K in Baker, 2 T's in Scott. Scott, thank you so much for joining us on 5 for Finance. I hope to see you again.
Okay. Thank you very much, David. Take care.
If you're enjoying this and learning something new about your business, please remember to leave some comments down below, hit subscribe, or send me an email, david@fusecfo.com. I look forward to hearing from you.